Last week was our first playoff game, and my plaque psoriasis was so itchy under all my gear. Sometimes just thinking about scratching could take me out of the moment. And then my doctor told me I could get clearer skin with a pill called Otezla.
Otezla Apremilast is a prescription medicine used to treat adult patients with plaque psoriasis for whom phototherapy or systemic therapy is appropriate. Otezla can help you get clearer skin after just 4 months.
Okay, ready for the next game. Talking to my doctor about a pill was a total game changer.
Don't use Otezla if you're allergic to it. Get medical help right away if you have trouble breathing or swallowing, swelling of the face, lips, tongue, throat, or arms. Severe diarrhea, nausea or vomiting, depression, suicidal thoughts, or weight loss can happen. Tell your doctor if any of these occur and if you have a history of depression or suicidal thoughts. Live in the moment. Ask your doctor about Otezla. Call 1-844-4-OTEZLA or visit Otezla.com for prescribing info about cost, and more.
Reality radio for a really great future. We're talking real money.
To the Doe Show.
Oh,
what are you doing?
That last 2 hours just was like, I mean, sometimes you show up for work and you hope it's going to be a busy day, and sometimes you show up and you think you hope for just a mellow day, you know, and that was just not a mellow 2 hours.
Are you talking about our 2 hours that we just completed on Como?
That was crazy. The callers and the lightning storms and the cats and dogs and wow.
Just because I know people are going, what the heck is he talking about?
All right.
Don McDonald, your co-host here on Talking Real Money. I live in beautiful, stormy Central Florida. Indeed. Wow, was it stormy today. We had this huge thunderstorm, and I send the show to Seattle on a fiber optic connection. And the lightning hit nearby, and we hear a little snap. And the fiber modem went down, so I scrambled around, got my iPhone, hooked my mic up to my iPhone.
Crazy.
And got back on the air, so it worked.
Now I'm watching it right now. It's not a thunderstorm. Actually, it's a hurricane. It says Hurricane Debbie. I don't know what that means.
They already had one of those. Had one of those. I think they retired Debbie.
I'm glad to hear it.
Yeah.
Hurricane Debbie blew in.
No, here's the radar. See, most of the storm's gone.
Okay, feeling better. So anyway, we had that. I decided, just made an executive decision because
don't say it on this show. You're going to give some away.
Because I get 1 or 2 a year. I said, since Don's gone, we'll give away his book, and holy cow. Everybody started calling.
All right, I tell you what. Since you've already destroyed my revenue stream for 2018, my royalties now from selling the book are going to plummet.
Somebody else going to have to buy that half a beer for you. Sorry.
So go ahead, do it for this hour.
Okay, so if you call with a question to 855-935-8255, 855-935-8255,
which spells talk.
Pardon me, 83932.
Oh, gosh. Let me give it for you. It's 855-935-TALK.
I'm old. I can only take 2 hours of this.
Now, in Tom's defense,
he hasn't
been a radio talk show host for very long. You were a TV talk show host, and you never had to give out the number. But radio talk show hosts give out the number all the time.
That's true. Okay, that's somewhat.
I've been giving out numbers since 1985, and almost all of them end in 8255.
That's true, because in my early years, I was playing the hits.
You didn't give out a number then.
That's a good point. Now, I think we may have had a call-in line, but we didn't push it.
You never. No, it was only for actually, it was more like a contest line.
Yeah, it probably was. Yeah. Okay, you're right. Okay,
you didn't want them involved in your show. It was all about your ego.
I know. Live
today, sort of.
Yeah. All right, so we're going to give away a free copy of Financial Physics, which is a wonderful look at how money works, how to invest money, how to save money, how to take better care of your money. And here's the part I love. Here's because you were out, putting out forest fires or whatever it was in your backyard when I talked about it. The great thing about the book is it's not your typical financial book. Most people do not read financial books because they don't know the difference between a Sharpe ratio or an expense ratio. They don't know and they don't care. You don't want to know that.
Nor should they care. That's why I wrote the book the way I wrote it.
The book is meant to be read like a novel about finance.
Do you really want to know why I don't mind giving it away? I'll tell you. I wasn't going to tell you this for a few weeks.
I can see your heart sick. Go ahead.
No, my idea is because Financial Physics has been out since I think 2009, 2010.
Okay, maybe a little later, but okay.
Yeah, but it was right around there. It was right around when we started Vestory. I have a copy up there. I can look.
Good for you. Signed by the author?
No, because it would reduce the value.
Okay.
No, what I'm doing is I am creating an interactive version of Financial Physics.
Really?
The book.
So they call your number and you'll just say the words?
No. It's I'm turning it into Apple has iBooks at their iBook store. And they're the only ones who really have this. They're interactive. They have full motion graphics and interactive charts and all of that.
This sounds horribly expensive to me.
Guess how much it costs?
I have no idea.
$0.
Wow.
It's totally $0. And I'm going to give it away.
Which is about equal to the royalties you're making on the book?
Exactly. I'm not making that much on it.
Sorry.
So I'm going to give it away in the iBook store for absolutely nothing. It's electronic, though.
Okay,
it's not printed.
So
it's electronic.
we're talking about an actual book with a cover on both sides, etc.
Yeah, no, this is a real cover book, like printed book thing.
It's a nice book. Financial Physics. If you call and ask us a question, 855-935-8255, and simply today we will get your phone number. We'll call you back next week to get your address.
Yeah. Now, before we get into the rush of crazy calls that are going to be coming in, we discussed this over on Como, but I really think because there are different people listening to us here on KVI, we should probably touch on the big Seattle pension story that's been in the news.
I forgot. What is that story? Can you remind me?
The Seattle pension story?
I don't remember. Oh.
Wow. Really? We just talked about it an hour ago.
Oh, that Seattle pension story. Okay, all right.
You remember now?
Remember when you got hit by the lightning? Did you notice it went all the way down the wire and right into my headphones?
Yeah. I was going to suggest electroshock therapy, but you already got it, so we're good.
I feel so much better.
But here's the deal, and you told the story. It was in the Seattle Times where it was a watchdog. We talked about it last week on KVI. Yep. It was a piece where the Seattle City workers' pension is making terrible money. Terrible money.
Has made terrible money. The future may look completely different. Who knows?
Well, it will if they listen to us, and that's the whole idea. We want them to listen to us.
To you.
To us. I know. Here's what I want to do, is every week on the radio, right here on the show, on KVI, every week, I think we should give the Seattle City pension managers a quick investing tip. And so what we want you all to do is call them. And if you're a Seattle City worker, say, Tom and Don have graciously agreed to give you free advice on how to manage your terrible pension fund. Now, the reason they claim they are actively managing two-thirds of the portfolio. The reason they claim they're doing that is because they say there are markets with inefficiencies that an active manager could exploit.
Man, let me talk about that just a step back. I mean, the whole idea that what we believe and what we think the evidence proves, by the way, is that just investing in markets, just putting your money in index funds, exposing your money to a wide variety of stocks has provided a very great return and, in fact, done better than somebody trying to pick stocks or somebody trying to time markets or say which country to overinvest in or whatever. And we just had somebody put so much money in their energy fund because I'm sure they got told that energy is the sector of the future, a horrible fund with high expenses.
No, actually they bought it because they claimed it provided them with a 24% annual income.
The problem was it's sending most of their money back as that income. But the point of the matter is the reason you would be an active stock picker or an active mutual fund manager is that you think you can find something in the market that allows you to do better than just being the market. Otherwise, there is no reason to do it. None, because it's higher expense, it's tax inefficient. There are a ton of reasons it doesn't make sense. So many pension funds, a lot of them, and we talked about one of these last week, Carthage College has moved their entire pension to just index funds because they're very low cost and you can get market-like returns for a long period of time. Seattle, on the other hand, never used index funds. They are using some now. Don just pointed out that still 2/3 of the money that they manage for the workers that will need the money, that's $1 billion short of where it needs to be to fund all of the obligations, is in actively managed funds. And their answer to that, by the way, is the part that I really struggle with. Their answer is, well, we use, for the markets that we believe you can find inefficiencies, places to trade to make more than the market, we use active management. For example, Don, they mentioned Brazil, Russia, India, China, these places called emerging markets, developing markets.
Those are emerging markets, yeah.
So they said, that's a place where we think we can find inefficiencies and make more than just the market. True or false?
Well, it's not true. And here's what I did, is I went back and looked at some of the best, and this is according to Morningstar, the best actively managed mutual funds from very big firms that do active money management. Fidelity, American Funds, T. Rowe Price, and they all have emerging markets funds that have been around for 15 years or more, which is the time period I wanted to study. The average return for those three actively managed funds is about 11.5% per year, and the average expense ratio for those funds is about 1.25% per year for the three funds. They have very few stocks. The average number of stocks is about 150, 160, somewhere in there.
A very few number. That's a small number.
Very few stocks. So I compared that to an index-style product, the Dimensional Funds Emerging Markets Fund, which made 12.15% over that same period of time versus about 11.5%, and has expenses of less than 0.5% and owns 1,100 stocks as opposed to 100 and some odd. So if the Seattle pension managers, if you use the Dimensional Emerging Markets Fund,
which they can, by the way,
which they can because they're an institution, you guys could beat what you've been doing, I bet. Show me your returns for your emerging markets funds. Bet you're not beating 11.5% a year.
You already have this up on the website. I'm looking at it right now.
Right. So what I did was I put all of this up on TalkingRealMoney.com. This is not just for your benefit, lovely listeners of ours. This is for the people who apparently don't listen to the show, the money managers at the Seattle City.
And what's their number? I thought you were going to give their number so people can call them.
So you can call them, and your city worker, you get the right to call them. And they say right here, if you have a question, the question is, why don't you just use emerging markets index funds? Why don't you use index funds for everything and make my pension better? And when they say, well, we can't get into that, you say, well, I tell you what, I know that probably you think I'm too stupid to talk to you about it, but there are a couple of guys who run the fastest growing investment advisory firm in the Puget Sound area, who have all these shows, who've been on the radio for 30 plus years talking about money. They have agreed every Saturday to give you an investing tip directly to you on the radio.
Yeah.
And all you have to do, you don't have to do anything but turn the radio on.
What's the tip this week?
The tip this week is go to TalkingRealMoney.com, take a look at the performance of these actively managed emerging markets funds, and you'll see that it would make more sense for you to get an emerging markets index, despite your beliefs to the contrary.
And next week, we will give out their home addresses so you can go visit them with that same information.
I haven't even given the phone number yet.
Okay.
It's 206-386-1293, 206-386-1293, the Seattle Pension Fund.
Tom and Don are talking real money.
All right, let's get this break out of the way really quickly. If you're looking for an investment advisor, you need a fee-only, 100% fiduciary, low-cost, science-based advisor. And that describes Vestory. If you'd like to learn more about us, it's really easy. Go to Vestory.com, Vestory.com, or give us a call at 800-386-3004, 800-386-3004. There, that wasn't so bad.
For your real life and real future, Tom and Don are talking real money.
And we are back. I'm Don McDonald, Tom Cox over there. This is Talking Real Money, the show where we try to help you understand the financial markets, the investment world, how it works, how it might work against you, how you can avoid being ripped off. And by the by, one of the things that I would like to suggest you do is call us. See, the last hour on Como, we had a woman call us who put $250,000 into this really bad oil trust that Tom alluded to. I'd really like it if you'd call us before you did that.
And they're calling now, apparently.
There's Tom calling right now.
Okay.
Yeah. I'd like you to call us before that happens. Please, really. If somebody's pitching you something. Now, I know you think, they're a member of my church.
They think you're pitching them something when you offer the book free. By the way, we never give away that book, just so people know. Because people probably think, oh, you do that every week. No, we've literally never given away the book, I don't believe.
No, we've never given away the book. We've given away Real Investing Journal, the magazine.
Never the book. So.
What made you think?
Well, I was here's where it came up. Gifts for dads and grads, because you chided me this morning when I said, how about financial gift for dad? And you said, there is no financial gift for dad. Well, number one is getting off the payroll, which you experienced this year. Woo-hoo! That's one gift. That's a gift that should keep giving.
Hey, by the way, that was last Sunday.
I know. Woo-hoo! That's a big deal. Number two is being smarter about your money. And you can do that by reading the book. So if you can't get off the payroll, get them the book.
That is a good Father's Day gift now that I think about it.
Okay, so you're giving me a bad time.
So if you don't get a free one, you can go get it for $10 at Amazon.
Is that signed by the author?
No.
Oh, okay.
I'm not going to sign these either. I'm in Florida.
How much is it if you try and find a rogue copy signed by the author?
I've never looked.
I'll bet it's. I hate to say it, but I bet it's less than the $10.
Oh, of course it is. Used books are always less.
Yeah. So it might be a little
dog-eared. Don't you want to reward the author for all his hard work with his $2 and change in royalties? Hold on. I'm looking it up. Used copies of Financial Physics. There are used options. Yes, it's $9.95.
Oh, okay. We're saving a nickel.
Used. Inspected and guaranteed. Cover is in great condition. I'm trying to find one that's signed. They're actually going for
how much?
I'm
secondary market is killer.
The secondary market's actually pretty good. Here's somebody selling a copy for $5.94 plus $4 shipping.
And how long does it take to get there?
I don't know.
That's funny.
No, look. Oh my gosh, people are hawking. Oh, I'm feeling really good now.
How much?
I'm feeling great. $21.
No.
$47.
Are they getting it? I mean, I could hawk a lot of things for a lot of
asking it.
I'm offering up, by the way, just today, I'm offering up my house $2 million. $2 million.
Look at this. There is someone in Florida selling a used copy of my book, used like new.
Yeah.
For $49.99 plus $5 shipping and handling.
I think you should. Oh, come on, $50.
I am serious.
Oh, okay. So here's a way to save yourself $54 and something cents because we're giving the book away today.
That is so funny.
Actually, you could get the book. You wouldn't even have to give it away. You could turn around and go online and sell it for $48 and make a lot of money.
Yeah, the cheapest one is has showed some wear from reading and stuff. Right, so they read it, and that's $4.50. So that's a used copy.
Yeah, okay, well,
so you can get it new. For
plus, you could charge $4 for shipping and actually only probably pay a couple bucks because it's pretty light.
Well, but if you're Amazon Prime, you don't pay anything for shipping.
True. So how much is it at Amazon today?
$9.95.
Oh, okay. So you can buy it there and have it on Monday. Boom.
Oh, I wonder how quickly they can get it to you. That's funny. I never, because they print them on demand. They don't actually have them sitting.
Bezos is in his basement printing them up over the weekend or something.
I'm going to pretend. Oh, Tuesday. You can have it. I can have it Tuesday.
There you go.
Wow, that's pretty fast.
That is.
Because today's Saturday.
Mm-hmm.
Oh, wait. Yeah, Tuesday. Free shipping Tuesday.
There you go.
Jeez. How do they do this? It amazes me. All right, so the bribe is on. 855-935-TALK is the number.
I am so confused about that whole thing. So, but anyway, okay.
Well, but see, that's what this hour is all about.
Confusion?
This hour is all about, we on KOMO, we have to be really...
Oh, it's bang, 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 bang. We had 12 calls in like 3 minutes or something.
Yeah.
It was crazy.
Yeah, so we come over here to chill for a minute.
Yeah, leisurely.
This is our way to gradually work into the weekend.
True.
We're working into the weekend. And, by the way, speaking of working into the weekend.
Yes.
Interest rates have been rising lately.
They have.
I don't know what that has to do with working
Is that
into the
setting
weekend.
up something? Is going to cost
really
you more to get a mortgage tomorrow or something on the weekend?
That's what I was getting to.
Well, yeah. I mean,
do you know mortgage rates are now at a 7-year high?
I just saw the 30 because I talked about it when you were off on your lightning strike.
If you
30,
missed,
do you know what a 30-year fixed is now?
No. What?
4.6.
Boy, am I glad I refied it at 3 5/8.
Yeah, I'm at 3 something. It's great, but
yeah, if you didn't refi, you.
But here's the other part that I did talk about while you were off putting out.
See, I don't know what you talked about because I wasn't there.
Yeah, I mean, I talked about the good news. For many people, have been savers for a decade. Well, they saved before that, but for the last decade, if you wanted to put your money in something, safe, non-volatile, you got paid nothing. But now you can use
You still get paid almost nothing.
Well, no, it's better than that. You can use the bond fund that we recommend, which is an intermediate term bond fund operated by Vanguard, the Vanguard Total Bond Market Fund, and that's paying 2.54%, 2.54. That's not bad. You could get a 2-year CD for about 2.1%. That's not bad.
Now, wait, it is.
Okay.
The last inflation report, I believe, was a monthly 0.2%.
Yes.
So you annualize that over a year,
no question.
and that's 2.4%.
Yeah, no, I got it.
So the net after inflation return is
not much.
Zero, basically.
And by the way, if you anytime, because this is something that comes up, people say, I wish it was 1979 again. I could put it all in bonds and get 16% a year. Well, yeah, because inflation was 18%. I mean, whatever it was, crazy, right?
Right.
There is no free lunch along those. Being safe has never paid particularly well, but it's paying at least something now.
It was an illusory return. You were getting this return, but remember, every time you went to the gas pump, it was up from like 35 cents to 85 cents to $1 something. It just, everything was more expensive. Everything.
All right. Well, let's go to the phones.
All right.
Did the bribe work? Down, apparently. And Mary joins us here on Talking Real Money. Hi, Mary.
Real Money.
Yes. Hi there. Who am I speaking with, please?
This is Tom and Don from Talking Real Money. How can we help you?
Yeah. No. Well, I spoke to you at the close of the KOMO show.
I remember the call.
Right, and the call was cut off?
Yes, we have more time here, Mary, so go right ahead.
Well, like I said, I came out of Apple Reach, and
hold on.
I had lost $70,000 when I sold it because it went public.
Wait. Mary. Okay, you came out of an Apple REIT? Is that what it was? That's what it was called?
Yeah, Apple Hospitality REIT.
So this is is that an individual REIT, or that's not a REIT fund, right? That is
that's an actual
single
REIT.
Real Estate Investment Trust. Yeah, okay.
Yeah, they were individual REITs. They started off illiquid, which was not a good idea. However, they paid very well, and in 2008, when the market went south, the distributions were lowered. The long and short of it was, then it went public. I paid like $22 a share and sold it for $17 and change. I took a loss of $70,000, and that very same day, I said to the broker, I need income. I'm in a bad place. I'm in a bad place because I did not prepare my life. I have no pension. I have no 401k. I have no IRA. I have nothing but the portfolio, and I never knew to have a fiduciary, to have a certified financial planner. I never knew it. I knew nothing.
Okay, but you are where you are today, right?
Exactly. Yeah, and I just want to reiterate, it is a very bad place for me because I depend fully on my portfolio.
Let me ask some
specific questions. Let's just do this.
Okay.
Let's do this first.
Absolutely.
All together, Mary, in all of your investments, you don't have to give me the exact number, but how much money would you guess is in all of your investments put together?
And your savings.
That's what I mean. Savings and investments.
This is from the last statement. Approximately $313,000 in the portfolio, and in savings, $40,000.
So $350,000.
$350,000.
Okay.
Now, here's the next.
And how old are you?
Important...
Pardon me. I'm sorry. Go ahead, Don.
Well, that's not
I'm
age
70.
doesn't. 70. Okay.
Well,
70.
Kind of
sustain.
matters.
Yeah, it does.
How much income do you need from your portfolio and your savings to get by in a year? Have you done a household budget?
Yeah, of course.
How much do you get from Social Security?
$859.
No, how much are you?
No, how much? How much are you drawing from Social Security?
$859.
$859 a month. Okay.
I need about $3,000 a month, at least minimum.
From the portfolio,
or altogether?
Yeah, from the portfolio.
That would give you about $14,000 or $15,000 a year to live on. Can that sustain you?
No, she said $3,000 a month from the portfolio.
Oh, pardon me. Okay,
Tom.
so 36.
That's $36,000.
So 46,000. Okay.
So $46,000 a year to sustain you in the lifestyle you enjoy right now.
Pardon me. $36,000 a year from the portfolio. Correct.
Right.
Got it.
Right.
Okay.
Plus the $859 from Social Security.
Now, I rent, I don't own, and I live in affordable housing. There is nothing less expensive around. It includes my utilities.
Nah, we rarely tell people to spend less because it's really a hard thing to do. So that is.
I understand, but I'm just making a point. There's no less for me to go.
No, okay. Yeah, I got it. I mean, here's the thing. So that is a withdrawal rate of about 10% a year. That's a pretty easy number to do, right? I mean, you need to take out about 10% of the portfolio a year to sustain your lifestyle. Correct?
Okay, correct.
Yeah.
Go ahead. You're on the right track. I know where you're going.
The question is, you could do that for 10 years.
No, but if she invested it, though.
We'll take it up in a minute.
Yeah, let's take a break because we've got to do the news here at the bottom of the hour. But there are all kinds of ways you can kind of pull this off. You're going to have to take some risk, but you've been doing way more. You've been taking way more risk than you ever should have taken. These advisors advise horribly. We'll be back.
Tom and Don are talking real money.
In addition to the Talking Real Money podcast, I also do another podcast that's very popular over at Apple Podcasts. It's called Money 30. Every day I try to educate and inform you about money in a brief 2 to 4 minute podcast. So check them out at Apple Podcasts or all the other podcast services or at money30.com.
Your guides to a really great financial future. Tom and Don are talking real money.
All right, here's the situation. Mary has about $350,000 in her savings and investment portfolio. She's been going to investment advisors who, by the way, will promise you anything. You say, I need 10% income, and they'll say, sure, we can make that happen. Mary, I'm not going to blow smoke in your direction. Getting a 10% return on your money is practically impossible. Okay? We got to start from that point. It is impossible. I know we hope for magic, but it doesn't exist. Now, a lot of the stockbrokers out there, they just want your money, so they'll tell you whatever you want to hear. They'll lie to you. They'll sell you an oil partnership. They'll sell you a real estate partnership. They'll sell you absolute garbage that almost guarantees you're going to lose money. Well, let me give you another way to guarantee you lose money, but maybe survive and not lose as much. You need to get this portfolio properly invested in a combination of equities and high-quality bonds. Now, over the long run, this will probably not return much more than 4 to 6% per year. You're not going to get much more than that. So what you do every year is you take out 10% of the portfolio's value, whatever that might be.
So you have a good
over time.
That's good. I like that strategy.
Then when you have a good year, you're going to have extra money. You throw that in savings for the bad years. When you have a bad year, you're going to have to draw from the savings to fund the bad year. It will run out. The money will run out. There is no way to know when, but it will be longer than 10 years.
And so which funds are you going to recommend? The Vanguard Total World and the Vanguard Bond Fund?
No, you know what? I don't think I think she's at a point where she has got to take this $350,000 and go get a real investment advisor.
Oh, okay. Sit down with somebody to come up with a strategy to do it, to sustain yourself.
You need a fee-only investment advisor. And, Mary, let me tell you where you can go to find a really good one. Go to the website dfaus.com. dfaus.com. Write that down.
DFAUS. Yeah.
Yep. And there's on the website, there's a spot where you can type in your...
Well, no, it's a little trickier than that. In the lower right-hand corner, there's a little gray box, and it has 5 dots in it. You need to find the dot that says, find an advisor near you. It's the 4th dot, I believe.
By the way, we do not operate this website, just so you know.
No, this is another company. And then you click on the Learn More, you type in your zip code, and it will give you the name of a number of advisors near you and tell you what their minimum investment is. And then what I want you to do is interview at least 3 of them. So you find somebody you're very comfortable working with. I know that every one of these advisors listed there, because I've looked at the list, is a fiduciary. Mm-hmm. Okay, I know that they use an investing style that we believe is very sound and based on solid academics and is truly honest and honorable. They don't sell commission products, so go do that right now, okay?
I hear that. Is there any way to retrieve? I've lost already about $65,000.
We don't know.
I can't afford it.
No. The hard truth is no. They've taken it. Now, wait. Let me take that back. If you feel you were misled, and it sounds like you may have been put into products that were unsuitable, you could always get a lawyer.
I was 100% misled.
Then you may have a claim there, yes.
Get a lawyer, but it's going to take a long time to sort this out, and you need to solve your problem in the short run, and that is getting somebody to help you manage this portfolio right now, and then go get a lawyer, and then you can go back and sue the brokers or whomever for providing you with unsuitable advice. But bear in mind, when you're talking to a broker, it doesn't really have to be in your best interest. It merely has they have to be able to say, it was good enough.
855-935-8255, 855-935-8255. Because Don was struck by lightning today, we're giving away his book until the top of the hour. So you call us, you ask a question, we'll get your phone number, we'll call you back next week, and we'll send you his book, Financial Physics on High Electricity, right? Okay, something like that.
No, it's not that kind of physics. It's FY physics.
That's right. Okay, so let's...
Paul, you're up next. Welcome to the show.
How are we doing, Paul?
Hi, been listening to you for many years, Don. I have a question about inflation. The number you quoted, I don't know if I believe the numbers the government gives us. Years ago, they took food and energy out of the index. You understand that, right? And so... is it really reflective of true inflation?
No.
Or is
actually,
it
no, it's not. It's not. We use that number because that's the number.
Right.
True inflation is, you want to take and put food and energy in there. My guess is with those, and I can look it up.
How about housing prices in Seattle? Have they gone up at all in the last 5 years?
Yeah, but that can't be U.S. CPI.
I mean, you could very easily make a case for the fact that inflation is running far higher rate than that here in Seattle. Right. Housing is outrageously well, and I don't know all over because I don't live there. I just happen to know here, and energy, as you know, I think the price of gasoline is up. Is it 20% over last year? It's quite a bit.
The essentials that we need,
right?
They take that out. You can't live without food or energy. Why did they do that? To fool us, I believe.
That's a political question.
That's a political thing. I don't care one way or another. When I'm advising somebody to invest and they say, well, I want absolute safety, then my answer to them is, even based on the government's CPI figure, whether you believe it or not, and I don't necessarily believe it, but even based on that, you are not going to make any money by investing safely.
That's a great point, Don. The point of the matter is, Paul, for basically all of us in the middle class, and we are just like you, You may have millions, we may not. The fact is, you are going, like Mary, you're going to have to expose some of your money to stocks that have done better than inflation over time. That's the struggle for most people, because they get to retirement and they look around and they say, I don't want the volatility. I don't want to worry about the markets. And the fact is, you're going to have to expose some of that capital to those markets.
Yeah, even more so than your argument if you use the CPI.
Correct.
Because it's probably double that.
I mean, the good news for some of us, myself included, because we mentioned this, my housing cost is basically, other than the cost of operating the house, the housing cost has remained basically flat because I'm paying the same mortgage that I was 10 years ago, other than taxes and insurance have gone up a bit. Otherwise, I'm paying that same amount. So that's good for me. For young people, because we have a lot of them who work for us, I feel horrible because they have to spend thousands of dollars to live anywhere close to our office, and that has gone up significantly in the last 5 years.
Sure.
And by the way, Paul, there is the media, like us, and we're guilty, we report core CPI, which is reported all the time by the government. But the government also reports another CPI that you can go look up, and that's called non-core CPI. Non-core CPI includes everything, including food and energy prices.
What's that at? Do you have an idea?
I'm trying to find it right now. I know the number. I'm just trying to find a site to get it.
Why don't more outlets use that number instead of the lying number they give us?
I don't know.
That's a good question.
Why does the media quote the Dow Jones Industrial Average as the market?
Because it's easy. Not. That's what they've done for a long time, and that's what here you go. That's the number. That's what you're accustomed to. You're exactly right, Paul. We should be more honest.
I believe it's tied in with the Federal Reserve System. I
got it. I got the non-core number for you.
Okay.
I got the non-core number. This includes food, energy, fuel.
For what period of time?
12 months ending April 2018.
Wow.
What do you got?
I have it. This is from the Bureau of Labor Statistics.
Let me guess.
Yeah.
Because the core was about 2.
It was under 2, just a little under 2.
I'll say with everything thrown in there, a little over 3.
Core for that same period was 2.1.
Yeah, okay, that's what I thought. Yeah, okay.
Non-core was 2.5.
Yeah, I mean, so again, do you believe that? I don't know that I believe that. I don't think that's true in Seattle. No, I think things are way more expensive.
No, it's not true in Seattle. You see, that's a U.S. average. But have you been to Kansas City lately?
I just tried
Housing
not
prices
to go there
not
regularly.
Going up.
No, not like here. No.
Well,
no. In fact, in some parts of the country, they're going down.
You're never going to get that safely anyway, so.
Well, no, you could buy a 5-year CD and get 2.5. I just looked at the numbers.
Oh, okay.
There you go.
Break even in 5 years.
That's a break even after 5 years.
That's right.
Okay.
Exactly.
Hey, one more quick question.
Yeah.
And I'll let you go. What are your opinions? Probably not great, but on having some precious metals.
We own companies that are in the business of mining them. We do not own them as a metal because there's no track record.
No, there is.
Go ahead. There's a track.
He's going 2,000-year track record.
Is that long enough?
Gold. True. I can show you a 2,000-year actual return track record for gold, based on any of a basket of commodities. Let's use potatoes. An ounce of gold in 1 AD would buy you the same amount of potatoes as an ounce of gold will buy you in 2018.
But that's good, though, because it's kept its store of value then, right? I mean, how much would a Roman coin at that time buy you today?
Hold on. Now, what was the value of the global economy in the year 1?
Yeah, who knows?
Compared to today? No, actually, someone does know. A guy by the name of Angus Madison, a British professor, calculated the GDP of the world going back to 0 AD or CE. And he found that the GDP, the total value of the planet, has increased geometrically over that 2,000-year period. In other words, if you had been able to make a bet on the global economy in the year 1, you would be a quadrillion. You put $1 down, you would be a quadrillionaire today.
And invest in the publicly traded companies, which was tough to do because the exchanges were rather limited in the year 0.
That's why I'm just using GDP.
Yeah, right, correct.
Yeah, right. But they say if you, like 40 years ago, if you had a gold coin next to what it was worth 40 years ago, $30 or whatever, today the gold worth.
But you know why gold was worth $30 40 years ago?
40
it was worth 30. It was worth $30 40 years ago because the government had
fixed it. Yes,
fixed the price. Now the price then floated. Now, if you had purchased gold in 1981, when it was at $800 and some odd dollars an ounce, you would have lost money to inflation by today.
Mm-hmm.
Nearly 40 years.
I guess I got your opinion of it, and that's all I asked.
Yeah, well, we're sorry we took the long road because this comes up. It hasn't come up as much lately.
Terrible investment.
Yeah, it doesn't produce anything. It's not growing. Wouldn't be a place we'd recommend you put your money.
Nope. Comes up here, I think, in large part because there are a lot of talk shows that plug gold. Right? There are. Look at all the talk shows that plug gold, where the guy goes, I have all my money in XYZ gold. You should too. It's a terrible investment. Terrible.
Tom and Don are talking real money.
Keeping the podcast breaks as painless as possible is my goal. That's why I want to very quickly tell you about the only magazine I've ever heard of that is 100% real investing all the time. There's no business news, no speculative advice, and certainly no lifestyle stuff. It's called Real Investing Journal. I publish it every quarter, and you can get 2 full years for only $25 at realinvestingjournal.com. That's realinvestingjournal.com.
For your real life and real future, Tom and Don are talking real money.
Yeah, because I'm bringing out financial physics in a free form, I figured I needed to write another book, one that I thought could get to bestseller status, since financial physics did not.
Okay.
Even though it's going for $50 used. And this is a working title. This is a working title for the next book. Uh-huh. It's Increasing the Physical Value. Oh, no, wait. Increasing the physical size of your gold through practical alchemy. That's my next book.
I put them all in with Bitcoin, spin them up, and put them in my basement, and plan to retrieve them in 50 years.
Oh, that was the new thing. I'm going to put it up on the website soon. There was an auction of Bitcoin art. And I don't even know what that means. But I thought about it for a minute, and I went, I can design Bitcoin art. So what I'm doing is I'm going to come out with these really elaborate works of art. They're kind of like sculptures in a way, based on my new Don coin, which is, of course, going to be so valuable. And you'll be able to buy these for you got Bitcoin art for $150,000. You're going to be able to buy these for $99,000. Now, the only problem with Bitcoin art, or with Don coin art, I'm sorry, the only problem is because it's made of Don coin, you can't see the art. We'll deliver it to you in a box, but when you open it, you won't see it, but it's there because it's Don coin.
My suggestion to you, by the way, in terms of the branding of all that.
You don't like Don coin?
No, there's another guy named Don who's done a good job with branding. You might want to go with the Donald coin. I'm just saying. I don't know. It might be. You might get more attention. It's possible.
Yeah.
Oh, golly gee. So if we had a nickel for every time if we had a piece of gold for every time somebody asked us about gold, we'd have a lot of gold. I thought about this carefully during the short break. And, you can't do a lot of thinking during short breaks. So if this isn't great, don't blame me. It was a short break. I could tell. I could tell with the book title, yes.
But it occurred to me, there are 2 very, very rich guys, Jeff Bezos and Elon Musk, both of whom are doing what? Sending rockets into space.
Building great companies, yes.
Well, but they're sending rockets into space. Now, there's been talk by both of them that they would like to go out, put a rocket on an asteroid that's filled with precious metals and rare earth elements, and bring it into Earth orbit so that it could be mined.
Yeah,
now,
think about that for a minute. That is not new. I've read about that 5-10 years ago.
No, but there are asteroids out there that contain more gold than all of the gold found on the planet Earth. Now, what would happen to the value of gold if billions of ounces of gold were suddenly brought to Earth and put on the market?
Yeah, what's going to happen to the price of Bitcoin when these guys sitting around with these supercomputers that are mining all this?
Oh, It's not even that.
I'm sorry, isn't it? I mean, isn't that more supply?
No, 1,400 new offerings, ICOs, initial coin offerings.
Crazy.
Came out in the last year or so. The Wall Street Journal went through all of these.
Yeah.
They went down through all of these offerings, and they found that about 20% of them were fraudulent.
Out and out stealing.
Oh, now just stealing.
Just designing. I mean, you had the now, Escobar family.
I was
no
just going to
offense.
say, I'm pretty sure
doesn't have the best reputation, shall we say?
That the Pablo Escobar Bitcoin.
No, not Pablo. Come on.
Whatever,
His
but it's
better known brother.
It's based on the philosophy of Pablo.
I guess so.
Steal anything you can. I'd be willing to bet that falls into that category.
Of the 20% that are just defrauding people. Yeah.
Total.
Oh, my goodness. Well, the good news is trading is down substantially. The price is down substantially. And I hope interest is down substantially in Bitcoin and its ilk.
Well, and it's really interesting. I went and looked at this. There is a new website. It's great. Go look it up. It's howiecoins.com. Go look it up. It's hysterical. Okay? Have you got it?
I'm trying. Hang on.
HOWEY coins.com. And look at that. You can get a 15% bonus on the pre-ICO of Howie Coins.
But only for another 14 days.
Only for another 14 days. What a wonderful opportunity. So you click on the... look at that.
I would never click on this site. Are you crazy?
No. I've clicked on it. Investors can purchase Howie Coins with any major credit card. If you invest by June 1st, you get double the coins and a 25% discount. If you get a double 25% discount. That means 50. By June 15th, you get 25.
The CEO looks like a reputable guy. Josh Hinsey.
Josh Hinsey.
I put my money
and Ashley
with him.
Turnbull. And then wait. So what you do is you click on Buy Coins Now. This is my favorite part of the site. No, you got to click on it. No, click on it. Click.
Wait, where? I don't know where. I don't see Buy Coins Now.
Okay, you got to go back. Go back to the site. Up at the top,
I'm at the site.
It says
token sale. Yeah, okay.
Click on that.
It's just a token sale. I love that.
Now go to Buy Coin Now. See the blue button?
Yeah. I don't want to
click on that.
I'm scared.
Go ahead. Look what comes up.
Nice. The U.S. Securities and Exchange Commission.
Yes. They said if you responded to an investment offer like this, you could have been scammed. Howie Coins are completely fake.
I thought the CEO looked kind of strange. Yeah.
They bought stock photography and put in smarmy-looking people.
Yeah.
Isn't that a clever way to illustrate how bad ICOs are?
Couldn't agree more.
So everybody, go to howiecoins.com and go ahead and play around on the site. It's really well done. It's well made.
I agree.
And it looks like a legitimate coin offering, but, folks, most of them are not anywhere near legit.
Okay, we're just about out of time.
Well, but we're not.
And you've been messing around with all this stuff, and we got this class coming up that we don't spend much time promoting, and it's just a few weeks away.
That's true, and it's a great class, by the way. If you're thinking, why, what are they talking about? Shouldn't buy gold? What do they mean you should diversify? You should use index funds.
How to do better than inflation?
On?
How do you create income for retirement? Because that's really at the end. You want to create a check from the stuff you saved.
So we have a class that we created, and we show you the class during lunch. We feed you. You have to pay for it, but it's not free.
It's not a free Daniel's
you gotta buy
broiler.
No, you got to buy lunch, and it's from Panera. But it's called The Science of Retirement Investing, and it's 45 minutes. When you're done, you'll go, that's why you say this is the way Seattle should be investing, because it's based
Seattle Pension.
And Seattle. It's based on academic, Nobel Prize-winning research.
Peer-reviewed white papers, not some idea that somebody came up with and decided to pitch you on an energy investment that's going to return 25% a year. That just doesn't exist, folks. So, yeah.
And as a matter of fact, you won't get sold. This is not one of those things where you're going to go, they're going to go, yes, and come meet us at the... No, we don't sell you stuff.
Nope.
We don't push you into doing anything. We don't buy you lunch. You have to buy your lunch.
Yep.
That's why it costs $10.
It's 1 hour, and we talk about, how to construct the portfolio that Don just mentioned, how to create income. We give you some tips on Social Security. It's all right there. 1 hour, and that's coming up June 13th. That's a Wednesday at noon.
It's a hump day.
Yeah, in our fancy, not-so-fancy conference room. And I'll be doing it, and you'll enjoy it. So to sign up for that, Talking Real Money.
You will enjoy it. Tom says you will, and you will enjoy the class.
TalkingRealMoney.com, right?
Yeah,
okay.
TalkingRealMoney.com.
And you can sign up right there. Okay.
Yeah, there's a button that says Learn, or it's right at the bottom of the page.
Right.
Either way.
And we only have 16 seats. It's limited.
Right. It is, and they always sell out. Mm-hmm. So get yours now, because here's what happens. We get down to the end and everybody says, I wanted to go to that lunch, Ed. And then you go to sign up and we don't have any more seats, and then you're going to feel bad, and we're going to feel bad too, and we don't want to make you feel bad. So make sure you sign up now. It's at TalkingRealMoney.com, TalkingRealMoney.com. Oh, and speaking of Bitcoin, I'm just looking it up right now.
Yeah.
I wanted to see how it's been doing. I love looking at the
week,
chart.
I think.
I love looking at the chart of Bitcoin. I look back at the 6-month chart, and I go back to December 16th when it was trading at like $19,282 a Bitcoin.
Good Lord. That's only like 5 months ago?
19,282. Actually, 6 months ago, it was at 8,250. Then it rose to 19,000 in a month. Then it plunged to 7,000 in February. Then it rose a little to about almost 11,000, and now it is back down to where it was 6 months ago, $8,197 a Bitcoin.
$8,000, yeah.
So you're spending $8,000, and I love.
Yes,
I've had these people. Somebody commented on one of my features, and they said, "You're so," it was on Twitter. Well, you're saying that Bitcoin's only used by criminals, and I said, pretty much, yeah.
Ever watch the show Billions? Here they hand you $1 million of crypto. Here you go.
You should watch Billions on Showtime. The episode before last.
Yep, episode before last. Yep, it is.
Yeah, a guy lies. I'm not going to give anything away, but a guy lies, and they reward him.
Yeah.
He lies a lot. And so they reward him. They hand him a flash drive. You know the flash drives. And they go, oh, yeah, here you go. Here's $1 million in crypto.
Yeah.
Now, why did they give it to him on a flash drive as crypto instead of cash? Why do you think? Untraceable?
Yeah,
this is why I don't understand the argument of all these younger folks who say, well, but it's the perfect currency. It's untraceable. What are you doing? What are you doing that the IRS, you don't want the IRS knowing what you're doing? My income is all traceable. Okay.
Sorry.
It means I'm doing something honest. I don't buy the crypto argument. Just don't buy it. Thanks for being a part of the hour. Bye-bye.
Tom and Don are talking real money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.